afternoon. Great to be here on our panel conversation, and thank you to Team RAO for inviting CAIA to be a partner at today's excellent forum. I'm really looking forward to moderating our discussion. It's certainly a biggie topic. But before we get into the nuts and the bolts on that, I'd like to introduce our excellent panelists that we have lined up for today's conversation. I appreciate bios are noted in the app and the service that we have here for you. But it's always great to kick off a conversation knowing who we have. And with three luminaries here, I'd like to give them each the stage for a moment to talk about their experiences and introduce themselves. Helene, maybe I can come to you first, please, to introduce yourself as we kick off today's panel.
Hey, thank you so much, Joe, and good afternoon, good morning, everyone, depends on where you're from. My name is Helene Li. I'm a banker turned impact entrepreneur. After stints at various bulge bracket institutions, I've really turned to applying all that in a platform called Go Impact that focus on bridging that knowledge gap, that common baseline of knowledge that we need in order to take action. So from pledges to actions, from the talk to the walk, that's probably the area where we are playing quite hard in. So look forward to exchanging with everyone here. Thank you.
Brilliant. Talking to walking, Helena. I like that. And Eila, good morning from Brussels there. Over to you, please.
Good morning and good afternoon as well. So I'm Eila Kreivi. I'm from the European Investment Bank, where I've spent the last 26 years in debt capital markets. And for the past 11 years, I was head of the capital markets there. And just 1st of February, I left the huzz and buzz of the daily capital markets, and I've focused since only on sustainable finance. So I have a new title, Chief Sustainable Finance Advisor, whatever that means. But it means that I'm involved in everything that has to do with sustainable finance at EIB. Thank you.
Fantastic breadth of experience there. My gosh, 26 years. And last but no means least, Tony, we've got you back online, which is great. Over to you, sir.
Yes, Joe. Good morning, good afternoon to everybody. Pleasure to be here. And very much looking forward to a good discussion. I recently joined Water Equity, which is a global impact investor dedicated to the water and sanitation sector, and really looking forward to working with them on a critical climate-related sector there. Until last October, I was director at the Green Climate Fund's private sector facility based in Korea, currently calling from London, and have a background in infrastructure investment generally. So really looking forward to an excellent discussion today. Thank you. That's
great. And thanks, Tony. I'm going to really round out our conversation as well. And today's conversation, our panel, our topic is climate change, the urgency of now and the question of how. And I think we can all agree that the first statement, the urgency of now, it's understood. You know, climate change, it's widespread, it's rapid, and it's intensifying. So I think with that backdrop, I'd like to kind of almost leave that to one side and use our conversation today to really discuss the focus and the question of how can we make changes? How can we actually impart change ahead? And one thing that really struck me was during our conversation when we prepared for today was the word collaboration was mentioned a number of times. I've listened into the session here at RAO today, and if we were to have a word cloud, the word collaboration would be front and center in big kind of capital letters as far as more that has to be done. I think we absolutely do need to change. Indeed, we need to change, but where should that focus be placed? And maybe, Helena, it's a huge topic, but it's a great way to kick off. What's your thoughts on all things collaboration? What needs to happen, particularly around the regulatory and the corporate sector, in order for change to come much, much more quickly, which the industry obviously needs?
Yeah, that's a huge question, Joe, and I'm sure that there will be diverse perspectives on this wonderful panel here. If I could take a first stab at it, I think if you look at COP26, some of the key findings, right up top was that the public and private funding have got to connect. Okay, so if that connection can only take place if the intersectional lenses are being applied, so that there are not disparate groups of people hammering at the agenda or different parts of it. And I see that happening quite a bit in Asia, for instance, at the regulators level. Okay, the Singapore Stock Exchange, SGX, recently, launched another 27 metrics based on TCFD for climate risk disclosure that will become mandatory by 2023. Now, they are not saying that, okay, come tomorrow, everyone, 27 new added metrics in everything that you do with your disclosure and reporting. But there's a transition. But that transition window is pretty short. It's 2023, which is right around the corner for a lot of corporations. And I think what that means is that the regulators and the corporate, the listcos in this case, are really merging their efforts in saying this must become a top business agenda. And we see that happening quite a lot in our learning programs that are being rolled out across financial institutions, private as well as institutional investors and all that. So it's that intersectional lens that I see as being critically important in moving from the talk to the walk, if you like, Jo. So let me just pause there and invite thoughts from my other fellow panelists as well.
For sure, that needing to push together, that's absolutely it. And thank you. Eila, what are your thoughts on all things collaboration from your perspective there?
Well, we're very much concurring with Helene there that this collaboration is, for example, in this sense, is absolutely important. And for example, what you mentioned, Helene, about the not having always the data available, like if you get new regulations and new requirements, nobody's going to do this overnight. And we see that very clearly in Europe. We have a huge regulatory sort of wave coming towards us. A lot is required from banks and from corporates. And one of the main question is, does anybody have the data? Well, to begin with, probably no, or only partial. And we need that. And we need also I think what we need also from regulators is very clear instructions. What do they want? And that is sometimes a tall order, because there's do I want to have the perfect information and then I get only partial information of what's going on, or do I go with slightly more lenient criteria and then I get a better overall picture perhaps of what is happening? I see this is a very important point. For example, here in Europe, you can do both, but you have to know the consequences, what they are. Either you have imperfect data or you have imperfect information. So this is one area where I think the public and the private sector will have to cooperate. There are other areas, but maybe I'll leave a word also to Tony, so not exhausting everything in this first question.
And before we just hand across to Tony there, I agree that whole provide some structure, can provide some tweaks that are ahead, but let's get something in place. Let's get a baseline going and then actually look back and make some tweaks that I think are absolutely right. Tony, anything from your days here in Asia before you went back to the UK? I think regulation is one thing across the entire financial services sector we're going to see a good deal of, but what's your thoughts on maybe the regulatory aspect that's been brought up by both Helene and also Eila in those last few minutes?
Well, we know that investment and the need for investment to address, climate change, energy-related issues, can really only be solved with not just the mobilization of all of that money from private and institutional sources, but critically the government's role. It starts there really, and the regulator plays a fundamental role. No question about that. PPPs, all that relate to that. Everything really is a public and private partnership in this area, and regulation is fundamental. And I think even on the private side, advocacy is critical. Design, responsibilities. Everybody needs to work together, undoubtedly.
Yeah, completely. And I think, as we all say, we know that's got to happen. That's got to happen quickly. But how quickly that's going to happen ahead of us, I just don't know what that's going to look like. And lots more to discuss, I think, over the course of the panel. But I am keen to move our conversation forward. We think about all things more on the green transition. And obviously a significant dimension that we need to bear in mind here is what's going on from the geopolitical landscape. So everything that's happening across Russia and Ukraine at the moment. Energy security is paramount. I think that's really surprised so many nations on their over-reliance on different countries, and self-sufficiency is certainly something which needs to be kind of thought about more quickly and more importantly. Eila, I know you've got some strong thoughts on how this is going to impact Europe's green transition particularly. Would you like to maybe share some further thoughts on that?
Yeah, no, I think the green transition is almost overnight now seen as something much more urgent than it was maybe a month or two ago. And that, I think, is a good thing, because we have seen with the COVID already that you cannot rely on sort of overnight global supply chains anymore. You have to be more self-sufficient than that, at least in the important areas. And well, if you don't get the, I don't know, semiconductors for your cars, that's maybe not a fatal issue. You can wait for your new car a little bit longer, or your new couch, because some parts of it did not come from all over the world. But energy is certainly something where you cannot allow a lot of lapses. And I think we have seen now all of a sudden this green transition, which people like me, we have been talking about now for years, that this needs to be done, actually should have been done already yesterday or the day before yesterday, but now it becomes much more urgent. I've seen Italy is doubling the construction permits for new wind power. Belgium is keeping actually the nuclear power stations running for longer. Every country is adding new wind power construction to the plans. And one area which is very important, but I think is not yet seen has not been looked at quite enough yet, is energy efficiency. I mean, we all need to save energy, and I don't know, I may be the only one who is old enough in this panel to remember the oil crisis from the 1970s. And you remember we were always switching off and on lights and trying to save energy everywhere, and all the home appliances went all of a sudden terribly energy efficient. And I think we need to do something similar here. It's not just that you have to rely on cheap energy, whether it's wind energy or gas or whatever. You also have to save energy. We have been used to now this for years, that we have plenty of energy and it's all free and it's all fine. That's not the case. We need to go really, we need to step up a lot on this globally, because it's not only the geopolitical aspect, it's a climate aspects, but all of a sudden now these two converge, and we have to see that we are not wasting that energy anymore. So I think we are all on a very steep learning curve here in terms of that energy efficiency. And I think governments are on a steep learning curve in terms of getting more self-sufficient in terms of energy, which they have not been. And for example, wind energy, solar energy, those countries who have enough of sun. I don't come from one of those. I'm Finnish. So, but wind, it's local and it's free, and it's something that nobody can cut off, and there aren't any. Well, there can be certainly supply breaks if you all of a sudden don't have wind, but it's much more sort of independent from any geopolitical situation. So I think we have to see all of this in a new context. And I've seen people, for example, in my own country who have not been worried at all about climate change, but all of a sudden see that, well, I guess we have to do this energy transition now anyways, irrespective. So speeding up and getting to the bottom of energy efficiency business, for example, I think we see that in a very different light now.
Yeah, I think that whole energy independence is certainly something that's coming up much more in headlines and people addressing, particularly here in Asia. I think we've got that chance to almost kind of leapfrog across existences of technology that we don't rely on from the West. We have obviously in most parts of Asia a little bit more sunshine, so access to good winds and access to sun will allow us to harness that. I mean, Tony, you spent a good deal of time in Korea with your previous role. Do you want to maybe kind of comment about that energy independence of what's happening in Asia and what's likely ahead? Any further thoughts from our perspective in Asia?
Yes, yeah, no, absolutely. It's such a relevant, it's such a current, it's almost a day-by-day topic, isn't it, currently? When we talk about, and I was just very conscious to use the word of convergence and how all of these issues really do seem to be converging in terms of what's happening today, geopolitics, and the obvious need for more independence of energy production in the context of world events. And we're all trying to be students of history, and you look at what's happening clearly in Ukraine today, but you look at what's over the years, over so many years in Afghanistan, even further east in history, all of these conflicts seem to be related to the need for energy, the need for raw materials, and so on. So it's something which it's so fundamental. When I was thinking about this and geopolitics and the need for, if you like, international support, it goes deeper. When we talk about climate and the Paris Agreement, what was that? What was fundamentally that? It was a deal struck between the developed and the developing world. And there's a need for support, of course, in terms of in that particular case, the developed world for the developing world to safeguard economic development. And of course, the Green Climate Fund, where I was for 4 years, really is a manifestation of that. That means capital flows, it means support, it means supply chains, it means so many different things. And I think we need to recognize that. And of course, the recent events have just brought that to light. So I think, when we look for solutions, it certainly has to be, back to your original point, Joe, of collaboration. It certainly has to be that at all possible levels, and support for even private and institutional capital flows to make these necessary investments happen is fundamental and critical.
Yeah, I'm going to kind of carry on with the word C. You've got collaboration. You weren't talking about kind of convergence. Do we see kind of calamity ahead, Helena? If you're going to have all these things coming together and converging, is that going to be good? Will that be good energy and that will deliver good things? Or do you foresee there could be some challenges there?
I was reflecting on this quite a bit recently, and I think that there's a push and pull factor as well from the Ukraine and Russia conflict. In the short term, in the immediate term, I think energy security will be very major concern for a lot of countries and a lot of people. And then there could be a thought that, we need the oil and gas because we need to secure the source of energy. But definitely, people, are thinking about the independence, the less reliance on oil and gas, because they know that how fragile that can be, the risk that they could be up to. And if you look at the GDP of the world, 90% of that comes from net energy importers. Okay, so the net energy importers will think about one thing seriously. It's not just energy security, it's independence, renewables. What do I need to do to hedge my risk or to better manage my risk? Because look, it can happen very fast. Faster than I expected. So I do believe that that's a whole shift towards renewables that we will see as well. Yeah.
Mm-hmm. Yeah, gosh, that's a great statistic. 90%. I didn't have any appreciation for that number at all. It's a significant number. And I think something else we're going to see a significant number is just the amount of infrastructure spend that's ahead. So if we see the sheer wall of money that's coming in globally, I think investors, both private and public and institutional, they're all diversifying into private market investments. It's been a great trend post the global financial crisis. We've seen a lot of money going into alternative investments in the last kind of decade, more over the last kind of couple of years. And some recent numbers that have come out is they're saying that more money is going to be putting into infrastructure investment. Particularly here in Asia, it's going to be one of the biggest kind of CAGRs from growth as far as investments ahead. Look what we've got to build, roads and bridges and infrastructure facilities that have to go in place with the amount of development we're going to see, please God, over the years in front of us. Surely that's an opportunity for some of these great big waves of change to come through, because all this money is going to be invested. I just hope that cash is going to go into good infrastructure that is green friendly, rather than kind of going back to buying old technology and old systems. And I think, Tony, maybe your experiences from previous times, obviously your Green Climate Fund days, what do the INSO guys need to do ahead when they're making infrastructure investments? What do you think we're going to see by way of infrastructure spending in a perfect world? We don't live in a perfect world, but what do you think we're going to be able to see ahead?
Well, Joe, you say we don't live in a perfect world. From one perspective, the need for infrastructure and certainly green and climate-friendly infrastructure, and that wall of money that you described, that is a perfect partnership, of course. That's why so much money has been piled in by all of those retirement funds in Canada, in Australia, and all over the world. Because of course, they want to, if you like, hedge their liabilities long term, and it's a well-known fact. So I think that is all in, if you like, conceptually in place. One of the issues, of course, and back to your reference to the Green Climate Fund and organisations of that sort, is not only really the need to, if you like, mobilise and respond to countries' need for resilient investment in the renewable energy and so on, but including that technology, which of course needs support. but also it's in the global south, in the developing countries, and that absolutely includes parts of Asia still, despite all of the economics development that's happening very rapidly right across the region. Support is needed, and it's needed in quote unquote non-OECD investments. Where effectively the rating is not investment grade. So I think there's work needed from public sources to do that. And by the way, that's one of certainly my job included providing that first loss facility to support and mobilize some of that institutional money. And there are quite a number of examples, of not just renewable energy funds, because the money is flowing, of course, even in some of the more challenging countries, but in things like resilient infrastructure, adaptation finance and so on, which is critical. It may not, in a very direct sense, bring the CO2, down over the project life, but it's fundamental. I mean, you can't secure economic development. And by the way, I've rejoined the water sector recently, and of course you can't separate out the need for water and sanitation worldwide, from the effects of climate change. It's inherent. It's fundamental. There are other areas, of course, which respond to that, but water is at the absolute core, and it makes good economic sense because even I'm calling in from London, the local Thames water company. It knows the importance of ensuring its infrastructure is resilient, and of course, back to regulation. The terms of economic regulation need to reflect that. So it needs work on all counts, all fronts.
And just, Thames Water, those are the days I lived back in the UK. But, investors are making better demands now. I mean, the investors are fighting with their voice. They're saying now to investment groups, the GPs, we want change. It isn't just lip service anymore. We need you to adhere to a bank of rules. We need you to adhere to things that we believe in as investors. What's been some of the observations you've seen from investors, in the last couple of years? You've left Asia, you've now come back to Europe. What have you seen investor sentiments that have been very different in conversations?
Well, the concerns are the same. I mean, climate change affects everybody I was going to say in an equal measure, absolutely not in equal measure. We know that, as in so many elements, the vulnerable will see the effects first and most dramatically. But in terms of securing, long term, if you just take, you mentioned, the water companies, wherever they may be, the investments are very long term. I mean, infrastructure by its nature is long term. There are life cycle costs which need to be accounted for and need to be understood, and to bring the investment in, you need to have that right balance, the right recognition and confidence. So as I say, certainly the money is there, but it will only happen if again, the regulators and the designers of the contracts and at all levels, will work together to generate that confidence. And you need stability to make all of that happen, given the amounts of money involved.
No, for sure. And Eila, I mean, some of the points that Tony's just shared touches on some of the thoughts you shared at the very top of the call about the urgency of now getting stuff done. What do you think we can see ahead with some of this infrastructure investment that's going to be made and continue to be made? How do you see that changing for good, what we need to get done in order to make some significant progress?
Yes, thank you. As you saw when Tony was speaking, I was nodding a lot here at my end, and that sounds very similar to our thinking at the bank as well. And it's I think it's something that has not been seen quite as crucial in the last few years. We have been looking at digitalization for sure and certain areas of infrastructure, but not all of it. And it is something that needs to be done. And this is exactly what, for example, public sector governments need to do, because private sector does not really do infrastructure. Okay, they can do individual projects, but they don't decide on the bigger picture. Financial institutions, even the multilaterals, don't take the decisions either. We finance them when they are taken, but we don't lead in the decision making. So this is something where I really see the government's role to take this at the sort of bigger picture and bigger level. And one word I really caught from Tony was this adaptation, which I think has been left a little bit in the shadow of mitigation. And yes, of course, climate change mitigation is primordial, but adaptation is so as well. And we, for example, we want to double our adaptation lending. It's difficult to see sometimes because adaptation is not, climate change adaptation is not something that you do as a one big project. It's like an add-on in many multiple different things. And but it has to be thought of because it is to encounter the damage that we have already done. And especially, for example, I think in emerging economies, this is probably even more important. But not only, we saw last summer or last year, we saw the huge floodings in Germany, in the heart of Europe, very wealthy Europe. We have seen the forest fires everywhere in the world. This is about climate change adaptation. These are the things that are happening. So it is extremely important that we look at both sides of the coin, mitigation for the future and adaptation for now, for today. So yes, plenty of work to do there. Thanks.
For sure. And I think, you bring it into a much more personal. I think there's nobody in the world that can't say they've not seen the change or the effects of climate, right? I mean, I think a good few years back, perhaps we could have been quite ignorant and recognise that it's all happening over there, or that's kind of affecting my life, and we felt very distant. But I think the whole impact of climate change is felt by everybody, and it's been the last couple of years most noticeably where that's happened. And maybe, Helena, from your experience prior to where you are now, back in the corporate days, what were the investors in Asia demanding of climate investment criteria compared to what they're requiring today? There's been a big significant change I've seen with investors that I speak to. Suddenly they have the why question, the what question, the how question to the groups they're working with. What's some of your observations about the investors' sentiment for change here in Asia? What are your thoughts on that?
That's a great question, actually. And to echo what Eila and Tony was saying before as well, people are not asking so much the why. I think we've put that behind us, but it's how. And that sense of urgency, like, the flash floods in Germany, in the heart of Germany last year, the bushfires that affects from California all the way up to British Columbia, very affluent parts of North America. So people suddenly realize, not suddenly, but people do realize that no one is immune from this. Okay, we are not that well sheltered from any of these risks. This is not something you see on television that happened to somewhere else that you've never been. So I do see the shift from investors' appetite from just looking at single products, okay, to really a more asset allocation. How do I apply that ESG lens into my portfolio construction? How do I ensure that serves a risk mitigation effect apart from generating return, generating alpha? Because they can see that has a huge risk mitigation element when they construct their portfolio through that lens. So I see that demand a lot from family offices here.
Yeah, I feel the same thing. The term I coined on a panel a few months back was transition alpha. I think groups now talking about how they can affect change. That group, that'll deliver some value for the end investor as well. But however, with that much wiggle room, there's lots of room for people to take advantage of that. And the word greenwashing gets thrown around left, right, and centre as we think about how suddenly everything you seem to pick up has got a green label to it or a green element to it. And one thing I was discussing with a headhunter a few months back is the fact that you've got career greenwashing. People that had very little experience that are working in anything ESG related are suddenly experts overnight. Not yourselves, for the avoidance of any doubt, you've all got a very, very long and very credible background, but it's amazing how people are greenwashing themselves into particular careers in this field as well. So there's a lot going on there. As far as some of the areas that people are taking advantage of. This goes back to all of your points about regulatory change, consistency, protocols and so forth that need to be put into play. But greenwashing is real, it's smelly, it's very unpleasant, and it seems to be quite prevalent in the more emerging countries as well. And Helena, I'd love to keep with you with your thoughts on all things greenwashing. Another big topic, I know. We've got 10 minutes, we've got a few more minutes left for our panel. I'd love to have your thoughts on that.
Sure. And may I add another term to it? It's not just greenwashing. It's called rainbow washing.
Rainbow, yeah, the elements of green, right? Absolutely.
The 17 SDGs that comes in different colors, okay? So suddenly everybody is saying, oh, I'm compliant by 1, 2, 3, 4, 5 of these SDGs in all the different colors. But if you blow through the dust on top, is it really, what exactly is happening? So whether it's rainbow washing, greenwashing, there's an element of trust and credibility among the investors that this is really undermining. And then I think, as an agenda, we can't afford that. Trust and credibility is at the heart of investing. So that's one thing. But the other thing that adds compounds to the problem is, as you said, there are so many growth of experts. I mean, I'm not staying on the panel here, as you said. I got a very funny infographics that what travels faster than the speed of light? ESG experts, self-proclaimed. So that's a very mean thing. I got an infographic on that, but that again, it compounds the issue of trust, and credibility of the agenda that we are all working very, very hard on. So I think there are two things that I see are promising. One is the harmonization of some of these frameworks and standards, okay? Because, the only way you can avoid greenwashing or get out of it is by things being measurable. You need to have metrics. And if there are too many metrics out there, it's difficult for investors to look at it. So I do see efforts to harmonize the different regulatory standards, and frameworks that are happening. I don't want to drown everyone in the alphabet soup, but there are many of the metrics out there. The second thing I'm noticing is the regulators are really pushing it. So the 27 metrics that I mentioned, SGX has, added, applying the TCFD framework on climate risk disclosures. And the Hong Kong Exchange is applying the same. These are very real, the stick of the regulator behind this. That only just doesn't apply to listcos, but for fund managers as well. The disclosures of your investments, the underlying of your investments, the assurance of the bond, that you issue, and so on. So we do see efforts being made, but definitely it's a problem. And I think ultimately it's a trust and credibility problem that we are up against, that we can't afford.
I think you're right, that trust and credibility, the whole time there's wiggle room, people take advantage of that. We want to have some framework and some robustness which we can apply in a consistent manner. And at the moment, I think people are just taking advantage of that, which I'm sure will be locked down over the months and years in front. Is that the same perspective in Europe from your experience, Eila? I mean, are we doing better there than we are in Asia, or different?
Well, I think the issues are global, really. I mean, it's not about one region against the other. It's a global issue. And for me, greenwashing, having been involved in this green market, green finance for many years now, my observation is that greenwashing usually doesn't happen where you flag something as green, because if you do flag, the scrutiny is quite tight from investors and everybody. Where greenwashing happens is in the other part of your business. I'm flagging this 2%, which is green, but I'm not showing what happens in the 98%. And hence, my 2%, which I show like very important, is greenwashing, because that's such a small part of what I do. And if you go indeed to the major oil companies' websites, usually the first color that hits your eyes is green, because they tell you about their investment in renewable energy, which International Energy Agency 2 years ago was observing that, well, they all tell this story, but in fact, it is 1% of their capex in global terms. So this is not really the main thing to highlight.
A little drop in the iceberg, or tip of the iceberg.
Exactly. So to me, this is greenwashing. And this is why all this reporting is very important, because it becomes wider. You have to show everything we do. And now we have this TNFD, which is about ecosystems and biodiversity, which I think is very important as well. And one thing which I just want to say about investors and even the larger audience, that this information is crucial, because this is not about investors or corporates becoming sort of social actors. They don't need to be. They will still make business. They will still try to make money. But this is the thing. You have to price in all the externalities. be it climate, be it biodiversity, be it the damage you do to water system, because if you don't price it in, you have no incentive to improve either. And also, it's false information. We all understand that if a company says that I'm making great results, great profits, but actually I haven't paid my employers for the past 10 months, that there is something wrong here. But if the same company doesn't pay for the carbon emissions or for the damage it's doing to biodiversity, we all have been sort of closing our eyes on this. So this is why information and investors and everybody's view on this is very important. We need to see the information in its totality, not just the one part that flatters you.
Completely. You know, the mirror's got to show everything, right? It's amazing going into the garden, ignore the weeds and look at the flowers. Yeah. And see the entire picture. I couldn't agree with you more. Yeah. And I think with that, it's there's a lot of great stuff to be done. And I think we've made some serious and some thoughtful steps forward. But as far as having some changes and some bold changes continue to be needed, I like to end the panel by inviting each panelist to share a sort of a takeaway of something, either a thought, an observation, something to leave our audience with as we exit out from our session. We've got a couple of minutes left. But I'd like to just do a little round robin and ask each of you to give some thoughts to something you'd like to leave our audience with today. Anything from today's session as a takeaway. Maybe Tony, you'd like to kick off with a thought for us all from today's discussion.
Yeah, no, thank you very much, Joe. I've really enjoyed this discussion. It's so relevant. Of course, you know, we know very, very challenging times in the world, and you kicked off with that subject, the geopolitical issue, which just brings everything very starkly home to us. I was going to say on you know, we've talked about the issue of greenwashing, and I think there's every reason to be optimistic. Of course, you know, in terms of the long-term response to that. I noticed that you mentioned Hong Kong Exchange, Helene, and I know the SEC, you know, is been introducing the TCFD rules. So I think there's plenty of reasons to be optimistic in terms of understanding the issue. Of course, self-interest rules. I think if parties can actually understand the genuine risk on that resilience and adaptation side to their businesses, as well as take the opportunities in terms of, you know, renewable energy and the like, you know, then we have a really, really good chance. And I think there's more recognition of that. And I think we should be optimistic and go forward with great excitement as to ultimately what we can do.
Fantastic. So I'm going to have the word optimism when I think about you moving forward, Tony, which is great. Helena, bless you. Bless you, Eila. Helena, what's your thoughts about takeaways? What would you like to leave us with today?
Yeah, right. Building on what Tony just said, you know, I'm a pragmatic optimist. Okay, so meaning that I believe, you know, like what Eila was saying, there's tons of work ahead of us. And if there is something that I would like to hone in on, more than sustainability, more than ESG or sustainable finance or whatever, anything cannot be sustainable if it's not resilient. So I think it's that resilience that we need to be building for the nation, for the city, for the company, for us as individuals. And resilience is all about being ready for something and not being caught, you know, totally unprepared for something, because then you are exposing yourself to huge amounts of risk that you may not, you know, be able to afford. So resilience, I think, you know, if we can hone in a little bit more on that at different levels, we should be optimistic. Yeah. Thank you.
Thank you very much, Helene. But also that nimbleness about resilience, that kind of on the balls of your feet, ready to be moved and to be nimble, right? Tenacious with that as well, which is great. Thank you. And finally, but last but not least, Eila, what's your closing comment for us, please?
Well, it's hard to add anything to those statements already, and a great meeting everybody on this panel. I've enjoyed it. I think just one thing that we always have to keep in mind, that when we talk about sort of green and sustainable finance and all that, we have to remember that there's also a big part of economy which is neutral, which does not do it doesn't do a great sort of steps forward, but it also doesn't do harm either. And that's why I just wanted to introduce also at this last minute to the discussion this concept of At least if you are not doing a lot of good, then don't do any significant harm either. So we have plenty of businesses which are not going to be at the forefront of the transition, green or social or any other color of the rainbow. But at least if they don't do any harm either, then we are fine. So we have either those ones who do good in one or the other areas, but nobody should do significant harm on any of these topics, and then we are basically fine. But this is a tall order, so we have to focus on both sides.
So almost hold your line, right? Insofar as if you're not going to kind of go backwards, hold your line, which I think is great from a perspective to leave us with this afternoon as well. So thank you very much for your comments. We certainly had a big topic as far as the climate change, the urgency of now and the question of how. And I think I've certainly been enlightened by Eila's and Helene's and indeed Tony's insights. I really hope that those that have joined us for our conversation this afternoon have also learned from the offerings that we've heard. To each of you, thank you very much indeed for your thoughts and the opinions that you've shared. It's been a pleasure to get to moderate our conversation and get to know each of you a little bit better as well. So thank you. Good luck for all that's ahead. And again, thanks for your time. And to those on the call, thanks for joining us this afternoon. And I'll hand back to the organisers. Take good care. Thank you. Bye-bye.